Please welcome with me Florian Döhnert-Breyer from F5 Crypto. Welcome, Florian.
Good afternoon. All right, so we talked about token standards, and now we are going to talk a little bit more about something precise, how to structure a portfolio of crypto assets and potentially how to structure them well in the future. And that's exactly what I'm talking about in the next few minutes. All right, so just a quick intro about me. I'm Florian Döhnert-Breyer. I'm the CEO of F5 Crypto. I'm also one of the fund managers. I hold a master in business administration. I'm a serial entrepreneur with 2 exits already. And I'm in crypto since, well, for almost a decade now, like next year. All right, and first of all, we have to ask ourselves, does crypto make sense in a portfolio? And the simple answer we all might know is yes. Why? Because when we add Bitcoin, representing crypto assets, to a portfolio, to a well-diversified portfolio, for example, with stocks, bonds, and real estate, we see the performance is getting better. But not only the performance is getting better, also, the risk parameters are getting better, and that's something really, really interesting about crypto, that it's not only the performance, no, all our risk parameters are much better. And we can see that here in the table below. We have the 4 portfolios, and we're adding 0, 1, 5, and 10% of crypto to the portfolio, and we see the maximum drawdown is actually not changing, which is really interesting. But the Sharpe ratio of the whole portfolio is increasing. So that's the best sign to see crypto should be in everybody's portfolio. The second question is, how much should be in a well-diversified portfolio? And well, the F5 Crypto is pretty much based on scientific findings, and when we are looking through all the researches done, we see that 2 to 15% are or should be in a well-diversified portfolio just by crypto. Depending on the willingness to take risks, of course. Also, what is pretty obvious is we should diversify also in the crypto sphere. We have high correlations. Nevertheless, diversification also makes sense. We should rebalance, but not too often, because we have to focus on trading costs. We should keep them low, obviously. We need to focus on liquidity. We have to take off or hold stake in case we need it instantly without having a big slippage in the market. The selection is really important. I will talk about this in just a few moments. And we also see in scientific studies that momentum is a really big thing in crypto. All right, let's have a look at the selection. Most of our fund investors start the same way. They have a look at crypto stocks. For example, they invest into a Coinbase stock. Secondly, they get a little bit more into crypto, but don't buy crypto directly. They're going to check crypto certificates or ETPs. You all might know them from 21 Shares or ETC Group, or from Wantable, for example. However, there's a demand on the one hand side, but that's not the best portfolio you can do actually in the future. The best portfolio is obviously you buy cryptos directly on the one hand side, but also you buy crypto funds, and you buy specialized crypto funds from topics where you have no idea about. For example, from arbitrage, or for example, from certain topics like gaming, blockchain gaming. This is something where you should seek help or investments done by experts. And by the way, that's also a way how I do invest personally, and I'm in the space for many, many years. Exactly where you can see on the slide, the focus area. All right, let's have a look at funds. Which funds exist? We have early stage funds like VC funds that invest into crypto tokens or maybe into the equity. We have liquid funds that invest into anything which is tradable on an exchange, on a crypto exchange. We have hybrid funds that go into the liquid ones and that also include stocks from crypto like Coinbase. And we have many funds which actually do trading. I just considered arbitrage as an example. And that you have like some kind of idea, I just listed some in the early stage, phase, and you might know Blockwall or Greenfield One or maybe Cherry Ventures or Smape Capital. We have liquid ones, of course, I'm considering mine on top, and we also have Haug Aufhäuser Lampe, Immutable Insight, Iconic Holding. We all have them here in the room or at least outside. And another one from Austria, which is called Venionair. On the hybrid side, you might also know Bit Capital, for example, from Jan Beckers, or Blockwall, or we have CoinX. We have someone from Switzerland like L1 Digital or Block Asset Management on the hybrid side. And for the trading strategies, there are interesting funds. For example, I'm not considering all of them, from CAC21 Capital and the Enviro Group. And well, in the future, I don't want to invest in those funds just by sending money from my bank account to the fund. I want to invest through a stablecoin. And maybe this could be the digital euro. And I don't want to wait for my shares many days. I want to get them instantly. So that's called like shares on delivery, instant shares. So theoretically, I could pay and get my shares in just a few instances. Right now, that's obviously not the case. Also, when we talk about the future, I would love to see the shares of the funds on chain. I can see every shareholder. I can see when they invest, when they divest. I can see if they sell their share. And this is also what I mean by tradability, that my share is on chain and I can trade my share of the fund anytime, anywhere I want. Also, what would be extremely good in the future would be that the register is on-chain and that all the tokens are, for example, stored in smart contracts. I don't need any custodian anymore. I just do it on-chain. And partially we obviously do that, but I'm talking about funds. And this is where we should head to with funds to make them much more efficient. And all this should obviously work paperless with my digital identity I have on a certain blockchain. Might it be IOTA or whatever blockchain you might imagine about digital identities. This would be a perfect fund investment setup where I can onboard and offboard instantly with low costs and transparent. All right. Now that we selected the funds, we should also talk about cryptos, where you should really focus on. And well, to select the correct cryptos, you should obviously diversify. So rule of thumb is that you should invest like into 10, 12 crypto tokens. Then from a scientific point of view, you are well diversified within the crypto space at least. And I would recommend, and that's also how we do it in our fund, we do fundamental analysis, like really deep researches into every coin. We look into the code basis, we look into the token economics, we are talking with the teams, and either you give it to experts like us, or you do it on your own, but do fundamental analysis and don't trust anything you get advertised on Twitter and co. You should also focus when you want to invest in the correct crypto tokens that you have some kind of liquidity. Like a good example is maybe the Bitpanda token, you heard about it. Many people use it, but it's actually not very liquid. When you are selling 10K in US dollar of the Bitpanda token, you move the price by more than 2%. And when you want to sell your whole stake, let it be like 100K US dollars, you are moving the price by 15%. So you should really focus on liquidity when you do investments. Also, like maybe to predict the liquidity, how it could develop. Has it many exchanges connected? Will they onboard more exchanges? Maybe are they going to DEXs? Is there an OTC market? Is there a market maker? You should consider that as well. I recommend, of course, to put blue chips into your portfolio. You all know the big blue chips, of course, but also you can add layer 1 protocols. They are solid. You don't have to make too much research compared to other coins. And you should also have a focus on the tech trends. That's really difficult, actually, but just by being here, for example, you see a tendency where the tech is going, what is required. Are those bridges? Is this interoperability? Do we need another Ethereum killer? you get the tendency by attending, for example, those conferences, or by talking with a fund manager like I'm. Okay, so just to give you a quick summary, what all this is, what I just presented, it's pretty easy. It has a name. It's not commonly used, but it will be used more and more to make the correct allocation in cryptos and to select them correctly. That's simply called crypto asset management. And this is a term which is going to establish more and more about the next years. And we are one of the few companies doing that and pushing this topic ahead. All right, and now I wanted to leave some time for some questions. And if you want to talk with the fund manager, we have also a booth out there. Feel free to contact me to say hello.
Fantastic. Thank you very much, Florian. I'm joining you on the stage on behalf of our online audience that might also post questions in the Telegram group now, and to also hand mics over for you. Are there some questions in the audience? Oh, back there.
Actually, I have two questions. First is, where is your fund manager regulated? Which jurisdiction? What kind of license? Second question is, if you invest a portfolio of cryptocurrency for diversification, some people saying like in maybe next 10 years, 60% of them will be gone. So how you, in fundamental research, how are you going to justify this portfolio?
Okay, the first question is easy. It's Germany. So we are registered in Germany. The BaFin is looking at us anytime. So we need to take care of what we do and what we are saying. And the second question is, will crypto funds survive somehow? And of course, not all will survive. Just the best one will survive, because we also, of course, have some kind of fees. We have to beat them. We have to beat certain benchmarks, which might be Bitcoin or Ethereum 50-50, or which might be the general market. And just the best will survive. And right now, it's the situation that we just have a few crypto funds. So all crypto funds I listed are like 80 or 90%, which you can buy in Germany, Switzerland, Austria, Liechtenstein. So right now, it's more like the phase. Funds are popping up, and we will see about the next 2, 3, 4 years, especially in the bear market right now, which will survive, but not all will survive. And in the end, the performance is the best indicator if the fund will survive the next years, because then they earn some money, and when they earn some money, they probably will invest more into their research team and will be there in 2 or 3 or 4 years. But looking to the future, like in 10 years, is really hard. And I guess most funds will have certain aspects where they are on chain, like for example the custody or the trading or the shares are on chain. This will be the fund of the future probably, and we also look into that. And if that's doable in Germany, we will be one of the first to do that.
All right, thank you very much. I actually get the stage directions on my phone in written form, and I was informed that there are actually questions in the Telegram group. First one is, do you use DeFi to buy synthetics or wrapped tokens, or to leverage your positions?
I would love to, but we are not allowed right now, so to do that. The regulator is pretty strict. As we have been one of the first crypto funds, we are like in a pilot phase, you would say, where they really focus on what we are doing, and you cannot get too crazy. We don't do any staking or any yield farming right now, but we plan to add that consequently.
Okay. Yeah, that probably adds also a little bit to the second question we received is, do you work as a market maker as well, especially concerning the DeFi space, for example, as liquidity providers? Probably same answer?
It's the same answer. But I know that some crypto VCs or early stage funds are doing that. That's not a secret, that they provide liquidity to new projects. That's part of their business, yeah.
Okay.
So that's doable, actually.
So, I see a hand raised. I'll bring over another microphone.
Yeah, the question is, how do you actually buy crypto? Do you buy it on centralized exchanges? Do you use pre-funding for that, or you use a liquidity provider? So how it technically works for your fund?
We buy them at regulated exchanges or that have a license in Germany. For example, you might know the Bankhaus Scheich or you might know Coinbase. Those are regulated exchanges in Germany, and then we can buy from them. Like all our service providers are from Germany and registered or regulated by the BaFin. So it's a really clear setup.
Spoken like someone who's permanently watched by the BaFin. I'll bring another microphone back over there.
It's nice to see so many questions, actually.
Thank you.
So real quick question. So cryptos, really came on the scene after 2008, right? And from 2008 to now, we've had quantitative easing, negative interest rates, and now we're entering into a phase with higher interest rates. And we keep saying, is the Fed going to pivot or not? So we haven't seen if cryptos are going to survive with higher interest rates. With that said, I've heard that they are more like digital gold and that they don't pay interest like they do on T-bills or bonds. So where does true value from cryptos come from?
True value is coming from when people are using it, actually. And that's not an utility token which is circulating rapidly, that people actually need it to get advantages or to store value into them. And I don't see that in many projects, actually. And the key is adoption and usage of the tokens to make them valuable, so that there's some demand. And of course, we also have to focus on the supply. It doesn't make sense that the supply is increasing every time. It should more be like Ethereum, where supply is decreasing. Then it would make sense to at least have like demand and supply. But when you're talking about intrinsic value, you're opening like a very huge topic, actually, and when you compare it to gold. But you can do staking or you can lending when you want to have some additional yield on top of your crypto tokens. And that's actually a topic which is really demanded right now from institutional investors to get into crypto tokens and to also have like a yield on top of them. Like proof of stake is a big topic, actually. And we also think about maybe setting up a fund about this topic.
All right. One last question was sent to us. Maybe it's a yes or no question. The question is, and I'm interpreting a little bit here, do you always use the same research criteria when selecting your investments, or do they adapt? Do they change? How many times have they changed throughout the recent years?
So first, we developed the research templates in 2017, 2018, and we just elaborated it over the years. So it is the standard template we are going through to make the coins comparable to each other. You have to decide if you go to Polkadot or Cosmos, so you have to have some kind of comparison between the coins. So that's why we use a standard template, but of course it doesn't make sense to always use a template. So we have like a section where we do like special, or where we look into special topics.
All right.
Yeah.
Thank you very much, Florian. That was a fantastic talk. And please give it up one more time for Florian from F5 Capital.